Big banks are shifting their forecasts, and now they believe the U.S. Federal Reserve will cut rates not once, but multiple times in 2025. Meanwhile, crypto sentiment has slipped into fear, with smaller altcoins struggling, but that could actually spell opportunity. Good morning, good evening, and good afternoon. Welcome back to the channel for another video. I hope you're doing great. I hope you are doing well, and I hope you are having a fantastic day. If you're new to the channel, I post a brand new video every single day covering the latest in cryptocurrency news, trending coins, market shifts, and the global events shaping the crypto world. Don't forget to leave a like on the video. It's a free and easy way to support the channel. Now let's jump right into it. Banking giants are forecasting that interest rates will be cut 2 to 3 times by the end of the year. This coming from Federal Reserve Chair Jerome Powell, who signaled a potential rate cut in September during his keynote speech at the Jackson Hole Economic Symposium. This isn't the first time this year we have had rumors of rate cuts happening, only to watch Powell stand his ground. In 2023, markets were convinced we would see cuts by mid-year. Never happened. Then again in 2024, traders were sure September was the turning point. Once again, Powell pushed back. At this point, if it happens, it happens. Waiting on a market shift because of rate drops might not be the right play here given the past few years. Several financial institutions and market analysts are now projecting the U.S. Federal Reserve, the country's central bank, will slash interest rates from the current target rate of 4.25 to 4.5, at least twice in 2025. Analysts at Bank of America, a banking and financial service company, reserved their long-held stance of no rate cuts for 2025 and are now projecting 2 25 basis point cuts, one in September and another in December, according to Bloomberg. Economists at investment banking firm Goldman Sachs are projecting 3 25 BPS cuts in 2025, beginning in September and continuing throughout October and November. Banking giant Citigroup likewise forecasts a total of 75 BPS cuts in 2025, spaced out in 25 BPS increments in September, October, and December, Reuters reported. The big banks keep front-running Powell, projecting cuts, but Powell himself never commits. I think the big question on most people's mind is why. Powell has made it clear the Fed will not cut rates until inflation is truly under control. While inflation has cooled compared to its peak, we are still stuck in a cost of living crisis because of stacking inflation over the past several years. Banks want to project optimism because it helps sentiment, helps stocks, and keeps clients positioned. At this point, I'm keeping my head down and stacking coins. And lastly for today, as Fed rate cut speculation drives investor behavior, Bitcoin and traditional markets have diverged in an unusual pattern. Stocks edge higher while Bitcoin lags. This divergence could present an opportunity if historical patterns hold. When such gaps appear, Bitcoin often catches up to stock market performance. This suggests potential upside if the traditional correlation reasserts itself. Some analysts still believe Bitcoin hasn't hit its peak this cycle, with targets ranging from $150,000 all the way up to $1 million. Of course, those are extreme projections, and most investors should take them with a grain of salt. But the fact that these numbers are still circulating shows the optimism underneath the fear we are seeing right now. Social media sentiment hit extreme negativity, with traders abandoning smaller altcoins for established cryptocurrencies. The current environment may be setting the stage for a strategic buying opportunity among the assets most feared by the crowd. Coins like Cardano provided a textbook example of contrarian sentiment signaling. The token's price began rallying precisely when social media sentiment hit extreme negative levels. This is classic fear in the market. Traders run to Bitcoin, Ethereum, and big caps, and they abandon the smaller projects. And yet, those moments of abandonment are often when the smart money starts positioning. Cardano was a perfect example. Prices went up when everyone was negative. That's contrarian investing in action. The current environment suggests that while fear dominates headlines and smaller altcoins struggle, these conditions may be setting up for future opportunities. So let's tie this all together. It is speculated that the Fed will lower interest rates starting sometime in September. Stocks are already moving higher based on that expectation. Bitcoin hasn't moved, which could mean there is an upside potential if it follows historical patterns. And while fear dominates headlines, smaller altcoins may actually present opportunities for those willing to take a contrarian approach. There is even speculation that we will have an altcoin bull run this cycle. If that plays out, it could be the last burst of energy before the next crypto winter sets in. Well, that does it for me today. Let me know what you think in the comments. Do you believe the Fed will actually cut rates in September? Or are these banks just being too optimistic? If you found this helpful, don't forget to like the video and subscribe for daily crypto updates. And as always, wherever you are in the world, I hope you are doing well. I hope you're doing great, and I will see you in the next one.